What is up, ladies and gents? Welcome back to the channel. Today, we're diving into why rich countries are absolutely hell-bent on buying more gold, even though the prices are higher than Snoop Dogg on a Friday night. Seriously, gold is more expensive now than Joe Biden's dentures. In all seriousness, let's break down why these nations are going for the gold in today's video. First thing I want to discuss is let's talk about the central bank's golden obsession. First off, nearly 60% of rich countries' central banks think gold share of global reserves will rise in the next 5 years. This is up from 38% last year. It's like the central banks got the gold fever, and who can blame them? With the way things are going, gold is seen as a solid bet, unlike some presidents' approval ratings. Joe Biden. But then, why suddenly the interest in gold? Well, it's not exactly new. Emerging market central banks have been hoarding gold since 2008 financial meltdown. It's been happening. These guys have been buying gold like it's the last PS5 on Black Friday. Now, advanced economies are catching on and will follow suit. Let's dig in a little bit deeper here. Central banks are like the ultimate trend followers. When they see emerging markets stocking up on gold and surviving crisis better, they think, well, hey, maybe we should get in on that action. It's like watching your buddy win big at poker and deciding to copy his every move since that. And the stats back this up. Around 13% of advanced economies plan to increase their gold holdings in the next year. That's up from about 8% last year and the absolute highest level since this survey started began. Central banks are basically saying, we want more gold. It's like Oprah giving out cars, but instead, gold bars. Let's talk about the decline of the US dollar. We talk about that all the time on the channel. Now, the greenback, the almighty US dollar. It seems central banks are losing faith in it. About 56% of advanced economies believe the dollar's share of global reserves will actually drop over the next 5 years. Among emerging markets, this sentiment is even higher at 64%. But why is this? Well, the US has been weaponizing the dollar through sanctions, especially against Russia. Now imagine your neighbor keeps borrowing your lawnmower and then all of a sudden one day starts telling you a story to use your own tools. Just like imagine that. Eventually you'd start looking for alternatives too, right? It's just going to happen. That's the way things work. So what's driving this dollar discontent? It's not just about the sanctions. There's a broader strategy here at play. Central banks are diversifying their portfolios to actually reduce their risk. They're like that friend who invests in stocks, real estate, crypto, and now gold. And get this, the dollar share of global foreign exchange reserves, excluding gold, has plummeted more than 70% in 2000 to around 55% last year. Now, including gold, the dollar share has dropped below half. The dollar's losing its shine faster than Biden can lose his train of thought. So why gold? Well, the central banks love gold for its long-term value, its performance during crisis, and its role as a diversifier. Think of gold as the old, reliable grandpa that's always there and always valuable at kicking off knowledge to you. Unlike some other old guys we know who can't even ride a bike without falling over. Gold's appeal lies in its stability. That's like the dependable friend who always shows up no matter what. Central banks are essentially looking for that safety net, and that is gold. In times of crisis, gold tends to hold its value or even appreciate. It's like the rock star of assets, always ready to steal the show when everything else is crashing and burning. So let's take a look at some exact numbers. Central banks added over 1,000 tons of gold to the reserves in both 2022 and 2023. That's a lot of gold, folks. This buying spree has driven gold prices up to nearly $24.50 per ounce. It's up 42% since the Israel-Hamas conflict began in October. That's why I put it in my IRA. You can too. There's a link below if you want to check that out. What's the impact on precious metals? How does this happen? Well, central banks hoard gold, and it drives up the prices. Simple supply and demand right there. This gold rush is not about just orders. It's about hedging against uncertainties. And let's face it, there's no shortage of those right now, ladies and gentlemen. The price hike in gold affects other precious metals too. So you've got silver, platinum, palladium. They often ride the coattails of gold. When gold prices soar, these metals usually follow suit. It's like they're in a race, and gold is the Usain Bolt of the bunch, while the others try to catch up. The dollar share of global reserves dropping has broader implications. As countries move away from the dollar, they're also eyeing other currencies and assets. Chinese currency has actually made some gains as a reserve currency, but there's still that skepticism about China. Central banks are cautious because China's economy is shakier than Biden's teleprompter reading skills. Historically, gold's always been a safe haven. That's no secret. From ancient civilizations to modern economies, gold's been the go-to asset during turbulent times. The 2008 financial crisis was a wake-up call for many people, and now with geopolitical tensions, economic uncertainties, and fluctuating markets, gold's allure is stronger than ever. Looking ahead, the trend seems a little bit more clear. More central banks are expected to increase their gold holdings, With the dollar's dominance waning, we might see a more diversified global reserve system. This isn't just a passing phase, it's a strategic shift that could reshape the financial landscape. And let's be honest, with the current leadership, or lack thereof in my opinion, countries are looking for more reliable assets. Gold doesn't tweet, it doesn't fumble speeches, it definitely doesn't fall off bikes. It just sits there, gleaming and valuable. So there you have it. Rich countries are buying gold like it's going out of style because they see it as a safe, reliable asset. I do as well. With the dollar's dominance declining and global uncertainties on the rise, gold is the go-to for central banks looking to secure their reserves. If you like this video, shoot me a thumbs up, give me a like, a subscribe. There's a link below if you want to add gold to your retirement. It's your most important asset you have to protect. Greg and I both did it. You'll get a free guide emailed to you directly. Thanks for watching, and I will catch you in the next video.